Trade management is the holy grail when it comes to trading. And in this video, you're going to learn how to manage a trade, add into winning positions, add into losing positions, when to manage your stop loss, and when to avoid a setup altogether. 1 in 3 of my trades that end up hitting my stop loss end up hitting me for a full loss. This is risk management. When you hear people throw out the term risk management, they're not talking about risking the same amount per trade every single trade. They're talking about adding into their winning trades, adding into their losing trades, knowing when to move their stop loss, when to avoid the setup altogether. This is risk management, and this is what you're going to learn here today in this video. I have 15 trade reviews that we're going to spend about 1 to 2 minutes each about how to properly manage a trade and different ways that you could manage it depending on how you are as a trader. This is probably the most important video that you could watch as a trader, so I appreciate if you guys like the video, subscribe. You can reach out to me on social media at MoneyballAustin, and let's get into this. So the first thing that we're going to talk about is cutting your losing trades early. One of the most important concepts that a trader needs to learn, and I see traders making this mistake all of the time, is not cutting their trades early and they let it hit their full stop loss. So this was a trade setup in Bitcoin that I really liked. It doesn't matter why I'm buying or selling, but in 5 seconds, prices were breaking through this opposing pivot point, the structure, it blew through it, it broke the downward momentum line, and we were looking at buying the pullback back into this zone when prices pull back. There were 2 stop losses, stop loss 1 here and stop loss 2 down there, depending on the type of trader. It doesn't matter, okay? But what I want you to understand is it's one of the easiest concepts to understand, is follow price. Is price making higher highs and higher lows? Or is it making lower lows and lower highs? Is the trade going against you? Close the trade. This is what prices would be doing by the time that we're getting long. So prices get in, we get long, it rallies up, it goes lower. Okay, that's probably a red flag. I probably don't want to see that happen. But what does price do at this point? It rallies up here, right? Test this previous area of lower low, lower high pivot point. In my head, I got to start thinking, am I going to hold on to this full trade if it goes against me? Or can I just close the trade altogether? At what point is the trade invalid? So at this point, I would be cranking up my stop loss from down here, or from down here, I would be cranking it up to here. I can still get long if prices go back in my direction, but I will get out at a half risk. So instead of losing $100, I lose $50, or in this case, probably $25 or $30, 1/3 risk, okay? Because it's making lower lows and lower highs, right? But not even that. Even if you didn't close your trade right there, it gave you another option after it rallied up. So from here, if from here at this point that prices cannot rally up here and break those highs and break this structure now, this is not telling you a trade that you should be in. You should close the trade altogether. And so this is what I mean. If I haven't moved my stop up yet, I've got to be cranking up my stop loss now. And what does price go on to do? It goes on and hits people out for a full stop loss down here and then down there. Prices literally told you it's making lower lows and lower highs. This is no longer a good trade that you want to be in, and that's completely fine. It rallies up, drops down lower. Okay, that's going to happen. I probably wouldn't close the trade. But at this point, once it starts rallying up, I'm going to be protecting myself, my stop, saying, hey, you know what? If it breaks this area, it's not a trade that I want to be in anymore. Okay, it falls, I get out. And even if you didn't manage it there, it gave you another option to still get out at half risk. This is the biggest issue that I see traders making. They take unnecessarily full losses when it comes to trading. There's one example. Let's go into another example. So this was a trade on the Russell. Okay, the way that I was managing this was I was buying. Prices were just making higher highs and higher lows. This is a very important concept to understand. Context to the market. What was prices doing? It was just lower lows, lower highs, and then higher highs, higher lows. No hesitation. Prices weren't breaking previous highs or previous lows. As it's making higher highs and higher lows, it's not removing these previous areas of where it pushed up from, right? So, hey, I like looking for buying opportunities. And so we ended up buying this area right here on the pullback, thinking, hey, higher highs, higher lows. This is a quality buy setup, right? That's the buy setup that I ended up buying into. Now, what did price end up doing? Okay, from here, it starts rallying up to the upside. At this point, this rally was unable to take out this previous high versus all of the other times it has taken out the previous highs on each single push. So at this point, it's no longer taking out that previous area. Well, that's an indication that the buyers are unable to step in, right? So what I ended up doing is I ended up just moving my stop up altogether. And I said, hey, you know what? If prices end up taking out this area of where it previously rallied up from and it was unable to take out those highs, I'm going to close the trade. It hasn't taken out higher highs and higher lows yet. Like these pivot points, it hasn't done that yet at all. So if it starts doing that, then I probably want to close my trade altogether. And that's what I did. I moved my stop loss up and I get out around break even at that point. Okay, it turns out prices did shoot down. It would have avoided a full loss. It would have avoided hitting my stop loss, and it would have gone up and hit my take profit, right? But I'm moving my stop loss up as prices go in my direction. Here is another trade that this trader took in our program, the Moneyball Trading Program. He was getting short here on this pullback. He ended up selling right here, and prices start going in his direction, okay? What did price end up doing at this point? Prices go in his direction. It just misses his 2-to-1 take profit. Personally, for me, I hate it when prices just miss my take profit and it goes and hits me for a stop loss. I would be moving my stop. Originally, his stop was up here when he was getting short, okay? What was price doing? From here, after he got short, prices dropped and rallied back up, all the way up here, going higher than it previously went before. From this point, it fell. Okay, great. I'm thinking in my head, great. But if prices start breaking this high and going above this area, this is now no longer telling me it's a smart idea at getting short. I need to close this trade altogether. Okay, it's now making higher highs and higher lows. This is not at all what I want to see if I'm getting short. It's already came into it once and fell, missed my take profit. It's now gone deeper for a second test. And now if it goes in triple for the third time, the chances of this trade working are extremely low, right? I will take a half risk. I will get out at a half loss rather than prices coming up and hitting me for a full loss, okay? So those are just a couple examples. Let's go into another one. This was a trade that I took actually this week, and I want to talk about how poorly I managed this trade. And I was talking about it in our private group saying, I'm an absolute idiot. I make these mistakes too. I'm not perfect. It doesn't matter the setup of why I was buying, but I ended up buying this pullback back into this area. Stocks have been going up 13 over the last 15 trading sessions. So I really wanted to look for buying opportunities. But this gave me every opportunity to close the trade. This is where I got long on this pullback. Look what prices did. This is a game that I play in my head. Like you should always have your stop loss at a point where the trade is no longer valid, right? That's why you have your stop there to manage your risk. But at what point, it's not a dollar figure, it's at what point is your trade no longer valid, okay? So at this point when I got long, prices come down, fill me, it continues to go down. No problem. I'm thinking that can happen. It goes down again and again. On that third candlestick, right? I start thinking in my head, well, this is probably not a smart idea at probably getting long. Like my system, my way of trading, this should have started going in my direction. At least it should have shown some type of buyers coming to step in. Okay, just no buyers were stepping in. And you can see this by we never broke the previous candlestick highs. We just fell, next candlestick fell, next candlestick fell. We're not breaking the previous candlestick's highs. You know, we're just printing small candle after small candle to the downside. So after this red candlestick here, I need to be thinking in my head, like, this is probably not a long that I should be in anymore, and I should just close the trade. But I didn't do that. I held it, and 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 it hit my full loss. This gave me every opportunity at a 50% loss on this trade to close this trade, and I didn't do it. I made a massive mistake. That was extremely stupid. It continued to sell off. There was no strength of buyers. I was thinking about the money. All right. I had another position in the gold market that I'll talk about next that was doing really well. And I was thinking about, whoa, if that's going to hit my take profit, and then this one's going to hit my take profit. And so I thought to myself, you know what? I can handle this, right? It's going to go up. Big mistake. But hey, I make mistakes too. This doesn't happen. This doesn't happen where it's like 8 candlesticks in a row. I should have closed that. And I see so many traders holding on to their trade. This is the exact same trade, but flipped on its head. But notice how I managed the trade. This was a lot better. So this was the same short that I ended up taking in. This was months ago. I ended up getting short here on the pullback. What do you notice right here? Black candlestick, black, bullish, bullish, bullish. Okay, at this point, I'm thinking in my head, I probably shouldn't be in this trade. Somewhere in here, I'm probably thinking I shouldn't be in this trade anymore. But I held it, and eventually sellers did try to step in and take it down, right? In this area, sellers did try to hold this and take it to the downside. But at that point, I thought to myself, I need to manage this trade. I need to move my stop. And I have originally my stop loss up here, and I move my stop to here. I accept, hey, you know what? If this is a failed sell-off, it's probably going to continue to rise to the upside, right? But at this point, if it's going to start selling off here, it's going to go in my favor. So that's why I moved my stop from up here to here at that point, taking about 30%, 25% of my original risk off, right? That was a proper way I should have managed that trade from that last trade I just went over. That was a good trade management. So those are ways that I will manage my trade if the trade is going against me. Very important there. If the trade is going against me, that's how I'm going to manage my trade. Now, this is a trade of me being delusional, losing context of the market conditions. This was a trade on gold that I ended up taking. And I want you to understand, during this time in gold, I really liked it as a buy setup. But over the last, on the ATR, the average true range on the daily time frame, we average about $40 moves for the day. What prices has already done is I bought this pullback here. I bought this pullback over here with my stop below here. During this day, the average true range is about $40. From here to here was about $22. And then prices just made another $22 move to the downside. I have my take profit all the way up here at $30. I'm asking for a massive move in the market to like 2 times, 3 times the average true range for a day trade, right? When it's already made its move. This is just out of line with the current market condition of what the average move will be. And here I am getting long. It's a great setup. I almost drew a PP there. I've been doing that a lot lately. That's a little bit concerning. That was an example of, taking a day trade with unrealistic returns. It's the same thing when a trader comes to me and they're swing shorting a market, like the stock market on a 1-hour time frame. I'm like, why are you doing that? The market just only goes up. It's in an uptrend. Like, why are you trying to swing short this? I think day trades are fine, but why are you trying to counter trend this? It's like one of the stupidest things that you can do. But you guys might be asking, what about adding into winning positions? Adding into winning positions is one of the most important concepts a trader needs to learn. I love adding into winning positions, but not every single one. Not every trade I'm like, I have to add. Where can I add? If the trade gives me an opportunity to add, I will add into this. So for whatever reason, I was buying this as my pullback. I bought this here down here with my stop down here with a take profit up here. But is there a way that I can add into my winning positions? The trade is going in my favor. It's not going against me. So how can I add? Well, typically, I will start adding into these winning positions into a trade when it's going in my favor at pivot points. So I actually have this lower time frame so that you guys can see this. Prices come in, they get me filled, and it starts going in my favor. Higher highs, higher lows, right? And I'm buying the pullbacks back into these areas. But during that time, I am cranking my stop loss up. Okay, I am minimizing the risk of this trade, because if I understand that from here, if I'm getting long on this trade and I'm adding into this trade here, okay, and it starts breaking this structure and going below this area, this is probably going to go against me and I want to get out of this trade altogether, right? So I'm cutting down my risk while adding into my trade. That's how I'm going to start adding into my trade, right? But of course, I move my stop up, right? It's going in my favor. I want to minimize the risk. I add into my winning trade with my stop down here. So if I do lose, I lose a smaller amount. But if I end up hitting my take profit, I win double. That's how I'm going to start adding into my winning trade. Let's look at another one. This is really good stuff. So this is another trade review talking about adding into winning trades. So for whatever reason, I'm buying this pullback back into here, into this demand zone. But how am I going to add into this? I start going down into a lower time frame. That's a big tip. So if I'm entering on like a 5-minute, I might use a 1-minute to manage my trade, to see these little lower time frame structure points of how I want to maybe close the trade if it's losing against me, or maybe add into a winning trade. Sometimes I go down to another smaller time frame to do this, and this is exactly what I did. So in this case, this was the buy setup. Okay, so I buy the pullback, and what does price start doing? Okay, it starts rallying up, breaks to highs, and it actually starts going lows at this point. Okay, eventually starts going up and breaking the structure, right? You guys can see this. It's very easy to understand. We had downtrend, we're now going sideways, and now we're starting to rally to the upside. I'm starting to think I want to add into this. This is exactly why I want to get long. I'm already long. How can I add into this winning trade? Well, I'm going to do that as it's making higher highs and higher lows. So I get long. I get long with my original stop down here. I then start moving my stop up to here as it's going in my favor, because I understand if price from here drops and takes out this previous pivot point that it made a higher high, this overall pivot point, right, it's probably going to lose altogether this trade. Or if it takes out this area, it's going to be a losing trade. So let me move it up to there. You know what I mean? So that's how I'm going to be managing my risk. But I'm adding into this trade now, okay? So as it's making higher highs and higher lows, I'm just adding into this winning trade, right? Pullback, I'm adding back into this area over here, and I move my stop loss up, right? Take advantage of it, take profit hits. I make a lot more than just hitting my first take profit, right? But if it goes against me, I lose less. Now, don't get me wrong. There'll be some times where the trade just goes directly in your favor and you don't get a chance of adding into your position. So this was a trade. It doesn't matter why I'm getting long or short, in this case short. I short here, and it just goes immediately in my favor, right? So this is one of the problems. If you're one of those traders that doesn't want to do that and you like reading the individual candlestick or looking at level 2 dome or, the heat map, right, the book map, if you're one of those traders, then you could do the same thing too. You got to find your own style to this, okay? But in this case, prices went in my favor instantaneously. Right? It came in, filled me, and eventually just dropped. It didn't give me really any opportunity for me personally to add into. But maybe some people look at this and they're like, hey, this is selling off, this is selling off. I see large stacks of sellers stepping into the market. I'm going to add into it. And you just market sell. That's totally fine. I'm not against it. I do the exact same thing too. But more times than not, I try to lean to overall structure areas of why I'm buying and selling. It makes sense to me. But I know many traders that do this, and that's no problem at all, okay? But sometimes you will have trades that, sometimes you won't be able to add into the trade, okay? Or sometimes you do and it goes against you. Or sometimes it just hits your stop loss and then goes against you. Let's talk about this trade, okay? This was a trade that I was actually adding into a losing trade. So I really like this buy setup. Gold up 32% for the year. It's in an uptrend. I see prices just going like this, higher highs, higher lows. I ended up capturing a nice buy setup on this area right here. And this trade went against me. This trade went heavily against me. Came in, sold off, and it just kind of broke structure. So overall, I had my stop. I had my stop down here. Okay, very wide stop loss, very wide. But I actually added into this because I liked the buy so much. I was getting at a cheap rate. And what I noticed was on the lower time frame is we actually started breaking downward momentum line and making higher highs, right? And so that's when I added into my winning trade, because I understood this was a very wide stop loss and I'm very bullish for the day and I'm getting gold at a better rate. So I'm going to add into this. Most of my adding into position trades are not going to be like this, but I do add into losing trades sometimes, and this is how I do it. If it starts going against me and I still really like it for the long, and I see prices, continuing to go down, but it's showing me now confirmation of prices going up, but I'm still overall in a drawdown, I still buy it. I still buy that pullback, and I'll get long and I'll add into it, right? But I'm definitely going to be cranking up my stop loss at that point to say from here, it starts going in my favor. I'm cranking that stop loss up to there, right? I'm cranking it up now to say, you know what? If it does go from here, from this point and sell off, that's the last thing I want to see. I do not want to be in a long market with this thing now making very clear lower low, lower high pivot points. That's the last thing I want to see. So I close the trade altogether and minimize my risk. Let's talk about another one. This is why I go over so many trades, is because you learn through repetition. I mean, I personally do. I hate it when people talk about just one setup, one example or two examples, and then they say, thanks guys, bye. I like to go over several. That's how people properly learn. And same thing, okay? This is my buy setup. Doesn't matter why I'm buying. I buy here. What does price do? Starts rallying up in my favor. You guys are probably wondering, at what point should I manage my stop? It depends on every single trade. But typically, I won't manage it until it's gone, say like 30% in my favor. And then I look to manage the trade, as in if I'm in a winning position. If it's just making lower lows and lower highs, I'll just close it. If it's a winning trade and it's going in my favor, I typically won't move it until it goes about 30% in my favor, and then I'll look at managing the trade. So at this point, I was cranking up my stop loss from when it goes here, up, and starts breaking those areas in that structure. I start moving that stop up to there, right? Because I think if prices fall from here and breaks this area, it's going to go a lot lower, right? So that's how I manage that long. But then I also add into this market as it's making higher highs and higher lows. Okay, same thing. Let's look at another trade. Same thing, right? Doesn't matter why I'm buying. I'm so far scrolled out. That's a big thing. Like, scroll out of your trade sometimes, guys. It will really help you. I'm buying the pullback back into here on a 30-minute time frame, but then I'm going down to like a 1 minute and managing this trade, right? Prices come down, rallies up, comes down, and actually starts making higher highs. Okay, so I crank up my stop up to here, and then I actually start adding into this over here, back into this area that it previously took off to the upside. Very strong move. It goes with my core strategy of supply and demand, adding in here. If prices go against me, I lose a smaller amount, but it's going to be telling me that this is probably a lot more likely to go a lot more further down, so I want to close the trade altogether. I don't think that you should just move it to break even just to move it to break even. To me, that makes no sense at all. And you see, one of the trade reviews I wanted to go over, here's another one. This is going a lot longer than I thought, but this was a trade from Tyson, and it's the same thing of how he was managing this trade. He got long on this. Look at this. This thing went in his favor and then lower low. And then what happened? Rallied up, lower low. Rallied up, lower low. It didn't stop him out. It actually rallied up and continued to go lower low, then stopped him out. Why is he holding on to this position? This is a 5-minute time frame. If you imagine what this looks like on a 1 minute, it's going to look like this, right? Why are we holding on to this losing trade that's clearly respecting these lower low, lower highs? We should be closing the trade, right? When we have this chance of getting out at break even or even profits, right? Keep in mind, you guys can still get long. If from here, prices, say for example, you just close the trade. If prices break to the upside, you can still re-enter long. Don't think, oh, I'm in a trade, it has to hit my stop loss or take profit. Get out at a small loss, get out at a small win, right? You can always re-enter these trades. It's a big mistake that I see these traders making, is they're not managing their trade, right? Another trade here. It goes in my favor and I move my stop and I avoid a full stop, right? This is what professional traders are talking about when they hear them talk about risk management. They're not talking about the same percentage per trade. They're considering adding into winning trades, cutting their losing trades early, avoiding setups altogether because the market is just not telling them it's a smart idea at getting long or short. This is one of the most important concepts a trader needs to understand, trade management. I want you to share this video with one of your trading friends. I would love to have you guys part of the Moneyball trading program where the whole goal is to build consistently profitable traders in 90 days or less. Check that out in the description. And if you want to learn my trading strategy in 30 minutes or less, check above my head right now that video, and I will see you guys later. Cheers. Goodbye.